Hello nieces and nephews, welcome back. Sorry I didn't make a YouTube video yesterday. Discord members, a lot of you guys know Uncle's in the middle of moving, and yesterday I tried to move a couch with my son, and well, let's just say Uncle pulled a muscle in his back. I hurt my back, spinal. Mike Tyson reference. Anyways, I can still chart though. Just had to rest my back. I was in a lot of pain. Still in a lot of pain right now, but much better than yesterday, okay? And guess what, guys? Guess what? The SPY did it. They recaptured the 50 daily moving average. That's incredible. Yesterday, it was a 9/11 was a very incredible trading day, okay? Very incredible trading day. Look at what happened, guys. Look at what happened. This is yesterday's trading price action. Like, you could make money to the downside, to the upside. Like, look at here. This is where the market opened, okay? At 9:30 candle, the market opened around 548.7. I had a 548 level, as you guys know. 548 level. Broke that down. I had a 546 level. Broke that down. Had a 544 level. Broke that down. It went all the way down to, once again, to that 540-ish level right there. Went all the way down to 540. And you guys look on the daily chart. You guys know that 540 was a previous buy zone around that area. And once again, we got buying pressure around that area. And once we hit that buy zone, wow, we recaptured a lost level. This is what Uncle say, don't trust a bounce unless we recapture a lost level. So once we hit 540, boom, false breakdown. You guys notice the 11 o'clock candle, we recaptured and closed back above 542. And then we treated 542 as a support. Okay, we did not break it back down. Then we recaptured 540. This one may have been a little tricky for some people, but notice we cleared 544. Now, the 11:45 candle maybe had thrown some people off. But notice it did not close. It did not close below 544. It was never lost. And then the 12 o'clock candle, it treated like support and bounced right off of 544, and it closed on the next candle 546. Closed on the next candle 546, and it just kept going up. Look, cleared 548. This was probably the easiest trade, was when it cleared 548, kept going up. Cleared 550, kept going up, all the way up. It was amazing. If you just traded based on the price action, you didn't trade it bearishly, and you just played the setups, false breakout, false breakdown, clear and resistant, breakdown, support. You just played the levels and setups. Should have did okay. You should have did great, actually. But gotta look at the bigger picture, though. We recaptured that 50 daily moving average. We ran right into the 20 daily moving average. Okay. We also, guys, remember this. You guys remember the chop phase we had back in mid to late August. 555 was a buy zone, and it was the breakdown of 555 that led to that beautiful move down. Okay, it gave us the expansion move down. Now we're getting a bounce, and we back tested it 555-ish as a resistance. So right now, SPY is trying to decide what it wants to do. Is it going to turn 555 into a sell zone? Is it going to turn this strong buy zone into a sell zone? Because if it does, that would be bearish. And for me to trust the rejection from that zone, 553.4, 552, and 550 all must fail. I'll trust rejections from resistance when it's strong enough to break down support. But if we get back above 555, guys, that is bullish. That is bullish. And we could possibly put some type of bottom in. This could have been a double bottom right here off of the 540-ish zone. Above 555, more upside is possible. Okay, guys, I think we have FOMC later today. Discord members, Uncle got you covered. All right, Uncle's gonna do analysis, and I got you covered. But just remember, guys, later we got FOMC. If you are not a Discord member, remember, on days like this, be very protective of your gains. All right? Because anything can happen. But overall, based on the price action, if we stay above 555 bullish, clearing 557 and 560 will be bullish follow through, sending us back up to 563 and possibly 565. And maybe even a new all-time highs. Remember, above 555, 557, 560, we are bullish. Okay? And if we break down 553.4, 552, we get bearish. We get bearish. We got PPI this morning, so the market could open anywhere. Just remember the levels and setups and trade it unbiasedly. Triple Q. It's around 469.4-ish. I have next resistant at 471 and fib level resistant at 472.7. I have this downtrend line here, the down green trend line at 477. If a bottom is to be in, 477 must clear. Okay, right now 471 and 472.78 must clear to put 477 in play. And above 477, a bottom is in. Right now, bears need to break down 469 and 467. That would put 465, 463.3, 462, 460, and 458 all back in play. And there's a very big possibility Triple Q can go lower than that. All right? So watch for the setups and just react unbiasedly. NVDA. I'm going to stay bullish on it as long as above 116. All right? If 118 and 120 clears, 121.7, that's a fib level, is in play. If that level clears, it's very likely we go test this downtrend line a third time. 125 en route first, and then to test that downtrend line be around 128.5-ish area. Okay? But I recommend staying bullish as long as overall above 116. If we're going to get bearish, then 116 must fail as support to put 114 in play first, then 112.5, 111, 109, 107.5, and 106 all in play, all back in play to the downside. But 116 must fail. Tesla, can it break out this downtrend line? I would stay bullish above 226.5. If Tesla can clear 230, they break out this downtrend line, and that would be very bullish. And then the next big resistance will be around 235. But if Tesla can clear 235, I would be bull bias with 237 and 240 plus in play. If we are going to get bearish, 226.5 and 225 needs to fail as support to put lower targets in play. 223.5, 222, 220.5, 219, and 216 will all be back in play. Below 216, I would be bear bias. I think we would drop lower than 210 if that is to happen. All right. IWM is trying to bounce. Today it needs to clear 211 and 212.7. All right. If it does, 215, 216.4 is all in play. Above 216.4, a bottom could be in. And I think we get back to 220 plus. To get bearish, I need to see 209 and 207.5 support fail. Both those levels need to fail. I would be bearish down to 205.8, 204, and possibly even lower than that. All right. Now let's get to the dark pool. This is for SPY. 59% of activity came in at 548.8. 548.8. That was 4.4 billion in premium. We see this much premium, expect some volatility. And then the other activities at 554.68 at 2.8 billion. All right, you can add those levels to your charts, guys. Triple Q, 49% of activity came in at 458.68. How much was the premium? 850 million, didn't quite break a billion. And then the rest was at 468.6, 620.9 mil, 277.1 mil. That's a decent amount. Here is Tesla. 86% of activity came in at 228.13. That'll be a big level. I do have a resistant level around 228, 228.5 zone. That is based on the downtrend line. So if we clear that level, it'll break out the downtrend line and break out the dark pool level as well. And then last but not least is NVDA. 116.91. 1 billion in premium. Guys, this is a stock. NVDA is a stock. You don't often see stocks get this much dark pool premiums over a bill or even at a bill. Usually way below a bill. Today, this is at a bill. 1 billion. Something's up. You know, for somebody to buy, someone has to sell, guys. All I know is, to me, it's not about who's buying, who's selling. To me, it tells me that these guys think right now is a good time to move a large sum of money. That they think is a good time to make this type of transaction. That tells me something. The move is coming. We got FOMC later. This is why we got to combine it with the price action as far as what direction is going, where to bet to. Did I get IWM already? 208.34. All right, 208.34. 76% of activity came in. 275, a little over 275 million. All right, let's take a look at the option flows. 100K premiums or above. I only want to see above the ask. I'm gonna put hide expired. I can't put hide expired contract. That's whack. Sweeps out the money. And this is what they did yesterday. This came in yesterday, towards the end of the day yesterday. These are the most aggressive ones based on my criteria. 3.3 million in puts compared to 451,000 in calls. Let's take a look at the context. Today is September 12th. So off the rip, this is a September 12th contract. It's pretty aggressive, but they got cooked. 551.61 is what 62 is around where they entered. 547 strike price. They got cooked. SPY didn't gap down or anything. All right. So this goes to show you guys that even the big money players can be wrong. But let's put it this way. Okay. Let's get like a little different perspective. This says bearish. That means that a lot of people are buying puts. But guess what? For them to buy puts, someone is selling it to them. Right? So while people think it's a good time to buy puts, somebody is selling puts to them. Okay, just something to think about. Now, the one call that we have here is this a 9/11 expiration date, 546 strike price. They enter around 544. They may have already cashed in. It was a big one, but you know, this is good for like if you watching this stuff during the day, but not very helpful right now. So I wouldn't even count that. Now, as far as the longer dated ones, we're still seeing puts. All these people are down right now. September 30th, 535 strike price. He bought it above, you know, the ask 552.5 where they ended. Somebody sold this to him. Okay, pretty sure the person that sold it to him is very happy right now. I don't know. October 18th, 514 strike price. That's very aggressive. But they enter around 544.9. They're down a lot. All right. This is a big one. December 20th, 490. I mean, here's the thing. When you're swing trading, I mean, I don't know if they're swing trading, but let's just say they got time on their contract. Maybe they're expecting a big drop today with the news and stuff. We'll see what happens. But this is what I got to show you guys because that's what's coming up. Big money, the most aggressive plays. There's you know, they're buying puts, but keep in mind, somebody is selling it to them. Triple Q, bullish, overall bullish, 1.7 mil to 1.5 mil, slight edge to calls. Let's take a look at the context. This puts October 18th. They bought it towards the end of the day, 445 strike price. They entered around 467. Now this one, September 12th, probably wouldn't count it anymore. This one, September 20th, 448 strike price. So we're still seeing aggressive puts being bought. But calls as well. Okay, September 20th, 480 strike price. October 18th, 470 strike price. September 20th, 465 strike price. Yeah, I would assume the people who bought calls is a bit happy right now, and they got time. All right, so yeah, bulls kick butt on that one. IWM and it looking bearish. 2.4 million puts compared to calls. Only 617,000. So October 18th for puts here. 200 strike price. They enter around 208. Another put for 190. That's December 20th. Another put for 200 for November 15th. Now we do have a couple of calls here. 215 strike price for October 18th. September 20th for 208 strike price. Pretty aggressive plays here. The most aggressive one is the put. 1.6 million in premium for 190. That's super aggressive. They entered around 205.2. They're thinking a little bit longer dated, guys. So they're not thinking in the short term, this person. But just remember, I'm going to say it one more time. Somebody sold it. While they bought it, somebody sold it to them. So you got to think of the perspective from the person that's buying and selling. All right. Did I get everything? Did I get Tesla? Tesla's bearish. 220, 215 strike price for September 30th. All right, guys. So, wow. Good luck today, guys. If you guys want more content from Uncle Charters or need help with anything, need an extra pair of eyes, I got you. Join the Discord. Link is in the pinned comment below. Other than that, thank you for being here. Peace.